Good day, guys. Today we're going to be discussing the qualities of a bull market and the qualities of a bear market. Now, today's session is not going to be too long because it's fairly straightforward. And what you want to understand when it comes to technical analysis is that the simplest analysis is the one that's going to be the most effective analysis. So, understanding the fundamentals, understanding the basics, and the basics of market structure, this will in turn help you make a lot more informed decisions in terms of taking an entry, and it will give you a lot more insight in terms of analyzing a chart. So, for example, let's say you're looking at a bull market. By you simply understanding how a bull market structures itself, you can look at the more defined and the more detail in the charts itself. So what we're going to be discussing this morning is just that. We're just going to be looking at the qualities of a bull market and the qualities of a bear market. Now it's so simple and it's so straightforward, because what we have over here, you'll see that I have these blue lines, sorry, these blue highlights over here. And all that this is doing, it's highlighting the lows of the market and it's highlighting the highs of the market. But what you will notice is that upon looking at the lows of the market, every time the market makes a low, it makes a higher low. You can actually see that this low over here is higher than that low over there, and that low over there is higher than this low over here. So in essence, you have this stairs type of setup, where if you think of a stairs, in order for you to get all the way to the top of the stairs, you're gonna have to step on the next step, which is higher than the current step that you're on. And this is how the market builds its way up. This is how the bull market moves up. So when I'm looking at a trend, I confirm a trend when I see that I confirm bull trend when I see that the market is making higher lows, like over here, and higher highs. You also need to understand why the market makes higher lows before it makes higher highs. And the reason for that is, in order for this market, that's a high currently. If I look at this high over here, that is a high. But in order for the market to go above this high, it must first pull back. In other words, it must retrace. Upon this retracement, you will notice that it retraces higher than the previous low. So this low over here, it's a low, but it is a higher low than the previous low. And what that means is that this low over here was strong enough to push the market this high over here. So this trend was formed by buyers, and as a result of that, the amount of buyers that were bundled up here was enough to push the value of this currency pair all the way up till over here, until they were not able to push it up further. And as a result of that, we see a temporary drop in value where they close on a higher low. So in other words, this is a low, but it is a higher low, resulting in the fact that the market has another opportunity to build forward. Remember, when we're looking at support and resistance, support is where the market, where the value of buying is at its highest, and resistance is where the value of selling is at its highest. So when I'm looking at the market making higher lows and higher highs, this low over here is actually seen as a support level. And with this low being seen as a support level, I then obviously see buyers bundled up on this level over here. And if buyers are bundled up over this level, value is obviously going to be increasing. And as you can see, that value really does increase and actually goes beyond the previous high. So what you'll notice that in order for the market to make higher highs, the market must first make lower highs, because in order for the market to move up, it needs to bounce off of a support. So you can see that same thing repeat over here, where the market retraces again, because now we notice that value in and of itself, value does not, there is not enough momentum to push it further up. So the market just decreases value on a temporary basis, but it doesn't go below this low. It actually goes above. But I actually want you to notice that here is a low over here. This is a very significant sign. This is a low over here. And in the market, this is actually a higher low, because this low is higher than that low over there. But then the market goes up, but it doesn't go all the way up. In fact, it goes up and then it comes, just moves to the side and then makes another low. But notice that this low over here is actually higher than this low over here. So in essence, this is also then considered a higher low, and that just confirms that this market is looking to break further to the upside. Now, if we look at this setup in and of itself, what we will say is that the market has made a low, then it moved up, but it didn't move all the way up. So then the market made a low that is higher than this low. But it's still this, because the market made this low over here higher than that low, we confirm that the market is still looking to go bullish. But if this market was to break this low, if it was to go beyond this low point over here, then it would have been a lot more difficult, because then in fact, instead of making higher highs, we are now making lower highs. And now what we have over here is the market that moves up. And yes, it gives us a little bit of a lower high over there, because if I highlight this one over here, I can see that the market gives us a bit of a lower high and then comes all the way back down. So this, at this point, will determine, is this market going up or is this market going down? If this market was going to go down, it would have to break this low. If it was going to go up, it would have to break this high. What we then eventually do see is that upon this retracement, the market makes another higher low. So by making that higher low, that confirms that we're still in a buyer's market. So what you'll notice is that this higher low then allowed us to make a higher high, which broke this high over here. So we're still in a buyer's market. But what you'll notice is that every time if the market is going to start taking out a high, then it's moving up. But if the market is changing the direction, then it's going to start taking out lows, which means it's going to be moving down. By you simply understanding this simple market dynamic, you put yourself in a very good position to leverage this when you're looking at a chart. So what I'm going to do, I'm going to clear all of this over here, and I'm going to jump over to the back, and I want you to look at the same setup as it relates to market lows. So what I have over here, and I'm only going to focus on a few. I'm not going to focus on everyone, but what I want you to see is I have this over here. So that's a low. That's a couple lows there that we have, and then we have a couple lows over here. So I'm just doing this very roughly. What I want you to see is that there's a high, and there's a lower high. There's a lower high, and I'll take that one, and we can take this one as well, this lower high over here. Then we have the market giving us lower lows. Now, I'm not going to highlight all of them, but I just want to highlight the ones that stand out the most. And what I want you to see, just like the bull market takes out highs, the bear market focuses on taking out lows. So what you'll notice is that here we have a low, the market trends to the downside, then it pulls up on a temporary basis to get more sellers collected in on that level over there. And as the sellers gets collected over here, we actually see the value decrease even more. And you'll see that that same pattern starts to repeat itself. So these qualities that we're looking at, these are market, the way the market is structuring itself in this chart over here, we can literally see that the market makes lower lows and lower highs, and we can understand what does this mean. So if I made a low over here and I made a lower high over there, I can confirm that I'm going to be making a lower low. Instead of just playing the guessing game to see, no, this trend is changing. In order for this trend to change, I need to take out highs, because you see I'm making lower highs, and in order for a bull market to arise, I need to make higher highs. So here, in order for this market to change bullish, the market would have to take out these highs. In order for the market to continue going bearish, the market would have to continue taking out these lows, of which it has taken out these lows several times. So what I want you to notice, or what I want you to pay attention to when you're looking at a trend, and you see that in this example, the market has made a low, then the market retraced, but it made a lower high. This high is lower than that high. Then this confirms that we're looking to make a lower low. By simply understanding that, you can leverage this by saying, if you are going to take a profit, your profit can be taken over there, because in order for this market to complete its trend, it must break this low over here. So we're going to be looking at this in a lot more depth moving forward. But for now, what I want you to take away from this session is simply just the qualities of a bull market and the qualities of a bear market. Furthermore, if you guys have any questions, you can just pop a message in the Telegram group, and I will answer it as soon as I get it. From my side, that's all, and I will see you soon again.